Imagine a single penny doubling every day for 30 days. It sounds insignificant at first, doesn't it? Many people would overlook such a small start. By day 10, you have $5. By day 20, it's $5,000. But on day 30, that single cent has transformed into over $5 million. This is pure mathematics. This is the marvel of compounding interest. It's not about how much you start with, but how long you let it grow and the consistency of your strategy. In the next few minutes, we will show you how to build the vehicle for that growth by opening your first brokerage account and setting your journey in motion. We'll break this down into 6 clear, professional steps to move you from a simple saver to a strategic investor with a global perspective. First, we must understand our tools. What exactly is a brokerage account and why is it the fundamental unit of a modern investment portfolio? Historically, market access was restricted. Today, a brokerage account is your secure digital gateway to the world's capital, accessible from anywhere. It is a professional financial arrangement that allows you to buy securities like stocks, bonds, and sophisticated exchange-traded funds with a click. Unlike a traditional bank account designed for liquidity, a brokerage account is built for capital appreciation and long-term asset growth over time. When you buy a stock through your broker, you are purchasing a fractional piece of a real corporation. You become a part owner of that business. As a shareholder, you are entitled to a portion of that company's earnings and its potential for future expansion in the global marketplace. There are 2 main types: full-service brokers offering advice and discount brokers providing the tools for you to execute your own strategy. For most strategic investors, discount brokers provide everything needed to start while keeping your overhead costs at an absolute minimum. Simply put, it is the professional home for your investments, the specific environment where your compounding takes place and your wealth is managed. Now that we know what it is, let's discuss why it is an essential part of your financial architecture and your long-term security. Cash sitting in a basic savings account is slowly losing its purchasing power to inflation. Over time, that money buys fewer goods and services. To preserve and grow your wealth, you must invest in productive assets that outpace the rising cost of living. This is a defensive necessity. The brokerage account unlocks the mathematical power of compounding interest over decades. It is the most reliable path to independence. Your gains begin to earn their own gains. This creates a snowball effect that starts slowly but accelerates dramatically as the years pass. Many established companies pay dividends, a direct portion of their profits sent to your account. This is passive income in its purest form. By reinvesting these dividends, you purchase additional shares, which in turn pay more dividends, creating a self-sustaining cycle of growth. It also allows for professional diversification, holding a broad range of assets to reduce your risk while staying exposed to opportunities. Ultimately, this is about freedom, the freedom to choose how you spend your time in the future, built on a foundation of sound investing. Preparation is a hallmark of the professional investor. Here are the technical specifications you'll need before you begin. Financial institutions are strictly required by law to verify your identity. This process is known as Know Your Customer or KYC. You will need a valid government-issued photo ID and proof of your current residential address, such as a recent utility statement. Your social security number or taxpayer ID is essential for the broker to report your capital gains and tax obligations accurately. This information is handled with the highest level of security, ensuring your privacy is maintained throughout the entire process. You'll also need the routing and account numbers for the bank you intend to use. This creates a secure bridge for transferring capital. Linking these accounts electronically is the most efficient way to fund your investments and begin compounding without delay. The broker will also ask for your employment status and financial profile to comply with regulatory standards and understand your goals. Having these documents ready beforehand makes the actual application process feel seamless, professional, and entirely under your control. Choosing a broker is a strategic decision. It is the foundation upon which your financial building will stand for decades. First, examine the fee structure with precision. Even small commissions can significantly erode your compounding power over time. Many top-tier modern brokers now offer zero commission trading for stocks and ETFs. Prioritize these to maximize your net returns. The user interface is your professional cockpit. It should be intuitive, stable, and provide clarity during market movements. Ensure the firm offers a robust experience across both desktop and mobile platforms, allowing you to manage your portfolio anywhere. Look for brokers that provide deep research tools, including analyst ratings, historical data, and sophisticated screening technology. These resources are invaluable for making calm, evidence-based decisions rather than acting on emotional impulses or market noise. Finally, verify their regulatory standing. The security of your assets is a non-negotiable first priority for any serious investor. Membership in the SIPC provides a critical layer of insurance, protecting your assets if the firm faces financial distress. Now, let's walk through the actual mechanics of the application. This process is designed to be completed in just a few minutes. Step 1. Select your account type. For the majority of new investors, a standard individual brokerage account is the most versatile starting point. However, if you are focusing on retirement, consider the significant tax advantages of an IRA or similar long-term account. Step 2. Enter your personal information. Accuracy here is vital to prevent any delays in the verification and approval stages. Your sensitive data is protected by bank-level encryption, ensuring that your transition into investing is safe and secure. The broker will ask about your goals and risk tolerance. This helps them tailor the platform experience to your specific needs. Provide honest answers about your experience and objectives. This ensures you have access to the right financial instruments. Step 3. Link your funding source. Secure services allow you to connect your bank account instantly for future transfers. Initiate your first deposit. This capital represents the seed for what will become your forest of compounding wealth. Step 4. Review and sign. A digital signature on the account agreements is all that's required to finalize your application. Once approved, which often occurs within 24 hours, you are officially a participant in the global financial markets. If you followed along this far, you are serious about your future. Subscribe to join our community of strategic thinkers. To ensure your foundation remains solid, here are 4 conservative principles for every successful first-year investor. 1. Dollar cost averaging. Invest a consistent amount every month, regardless of the current market conditions or the news cycle. This removes the emotional burden of trying to time the market and builds a professional habit of consistent deployment. 2. Start with low-cost index funds. These allow you to own a tiny piece of hundreds of world-class companies simultaneously. It is a proven, technical way to capture overall market growth while protecting yourself from the failure of any single organization. 3. Never invest capital you may need soon. Always maintain an emergency fund of at least 6 months' expenses first. This buffer ensures you never have to sell during a downturn, allowing compounding to continue its work undisturbed. 4. Cultivate patience. The most powerful force in wealth creation is time. Do not let daily fluctuations distract you from your goals. The goal is to grow wealth steadily and professionally. Remember that compounding is a marathon of endurance, not a short-term sprint. Building wealth is a significant journey, and by opening your account today, you have taken the most important first step towards your goal. We at Sketch Capital are here to provide the blueprints and the technical insights you need to navigate this path with confidence. If you found this valuable, please like the video. Your engagement helps us continue to build this library of financial education. Thank you for your time. I hope this was valuable for you.